Welcome to Talk Tickers. Today we're jumping into a real head-scratcher. You've got a company, Brazilian fintech StoneCo, that posts a stellar earnings report, and then the stock gets absolutely hammered. So, what's going on? Let's dig in.
So check this out. On one hand, you have the report itself. I mean, it looked fantastic. They beat their earnings per share numbers, and they even raised their guidance for the future. But on the other hand, you have the market's reaction, which was, well, pretty brutal. The stock dropped a whopping 11%. So what gives? What's the story behind this massive disconnect? That's what we're here to unpack.
All right, first, let's just focus on the good stuff. Let's build the bull case by looking at the actual numbers, because honestly, on paper, this was a very strong quarter.
First up, the headline number, earnings per share. It came in at 48 cents, which just blew past what Wall Street was expecting. We're talking a solid 15% beat right there. A great start.
And look, this wasn't just some creative accounting. The actual engine of the business is absolutely humming. Their adjusted net income, which gives you a much clearer picture of their real profitability, was up almost 18% from this time last year. That's some serious momentum.
And they're getting more and more people on board. They've now got 4.72 million active clients using their payment services. That's another jump of nearly 18% year over year. And it's really coming from their bread and butter, the small and medium-sized businesses in Brazil.
You know, talk is cheap, right? Well, management is putting some serious cash on the line. Over the last year, they've bought back 2.3 billion reais of their own stock. For investors, that works out to a shareholder yield of roughly 10%, which is a huge vote of confidence from the people who know the company best. And if you think the growth story is over, think again. Their credit portfolio, which is a huge engine for future profits, is just on fire. It grew an incredible 149% compared to last year. I mean, that's not a typo. They are absolutely flooring the accelerator on this part of the business.
So, with numbers like these across the board, it's really no surprise that management sounded pretty confident on their earnings call. Let's tune into the story that they were telling everyone.
The CEO, Pedro Zinner, basically said, look, things are tough out there, we get it, but we're just keeping our heads down and executing. The whole vibe of the call was about discipline and focus. You know, just consistently delivering, quarter after quarter. And it's not like they're just winging it. They've got this really clear four-part playbook. Step 1, dominate that small and medium-sized business market. Step 2, once you have those customers, sell them more stuff like higher margin banking and loans. Step 3, keep buying back that stock to reward shareholders. And finally, step 4, get lean by selling off the distracting side hustles to become a pure-play fintech powerhouse.
And just to put an exclamation point on all of that confidence, they didn't just say, yeah, we're on track for the year. Nope. They actually raised their earnings target. I mean, that's management basically shouting from the rooftops that they feel really, really good about where things are headed.
Okay, so let's recap. They beat earnings, they raised their guidance, growth metrics look amazing, and the management team sounds super confident. It sounds like the perfect story, right? So, why on earth did the stock get absolutely crushed?
This is where we have to put on our detective hats. With all this great news, what were the red flags? What were the little details in the report that sent investors running for the exits?
Okay, first and foremost, you have to understand the context, the mood heading into this report. StoneCo stock was already on an absolute tear. We're talking up almost 88% for the year, while the rest of the fintech sector was actually down almost 8%. This was a very, very crowded trade. Expectations weren't just high, they were through the roof.
And you know what happens when a stock is priced for perfection, right? Any tiny little crack and the whole thing can start to wobble. The market really zeroed in on a few things. First, payment volume growth, while still positive, slowed down a bit. That deceleration gets people nervous. Then there's the big picture in Brazil, where interest rates are at a painful 15%. That's a tough environment for any company. You've also got new competition popping up. And honestly, at the end of the day, after a 40% rally in just 3 months, a lot of people were probably just looking for an excuse to take their profits and run. A classic sell the news event.
So that's the full picture of what just happened, and more importantly, why. Now for the big question, where do we go from here? Let's get into our take on what to watch for next.
All right, looking ahead to the next quarter's call, all eyes are going to be on 2 things. 1, can they get that payment volume growth to speed back up? And 2, is that rapidly growing credit business staying healthy and high quality? Because you have this tug of war between strong execution from the company and these tough headwinds in the broader economy, our rating is market perform.
We think the stock is probably going to be range-bound for a little while, just kind of treading water until a new catalyst emerges to push it one way or the other.
And this really gets to the heart of the matter, doesn't it? It's all about this fundamental disconnect. StoneCo's management is playing chess. They're thinking 5 moves ahead, executing a disciplined, long-term strategy for profitability. But the market, well, the market is playing checkers. It fell in love with that hypergrowth story, and it wants that instant gratification now, and it's punishing anything less.
So there you have it, the full breakdown of a very interesting quarter for StoneCo. And as always, just a friendly reminder, all of this is for informational purposes only. It is definitely not financial advice.